you engage silver up out of its spread hole, relative performance low priced. It's enormous gains for silver versus gold. So again, we think 2025 is the year to be, watch gold, but especially watch silver and miners re-engage.
You're watching Silver News Daily. Subscribe for more.
Silver is standing at the edge of a financial earthquake, and almost no one sees it coming. The stage is set, the pressure is building, and when it erupts, the price could rocket past $100 an ounce, rewriting everything we thought we knew about precious metals. Think about it. Just over a decade ago, silver surged to nearly $50, and that was without the monetary chaos, the global supply crisis, and the industrial frenzy we're seeing today. But this time, it's different. The forces aligning behind silver right now are stronger than ever before, and the window to act is closing fast. Michael Oliver, a seasoned market analyst, isn't just throwing out numbers. He's looking at the same explosive patterns that triggered silver's biggest bull runs in history. And if he's right, silver isn't just going up. It's about to skyrocket. The mainstream media won't talk about it. Big institutions don't want you to see it, but the truth is right in front of us. Everything is shifting. Governments are losing control of their currencies, inflation is ripping through economies, and central banks are hoarding gold at record levels. But gold isn't the only metal in play. Silver is about to do what it always does. Follow gold's lead, but with a ferocity that leaves investors stunned. So, what's really driving this? And why are we standing on the edge of a historic silver supercycle? Stay with me, because by the end of this, you'll see exactly why silver's move past $100 is not just a possibility. It's inevitable.
2016, based on annual momentum, and frankly, nothing on annual momentum has altered that bullish view since then. You say, well, that's a long time. Well, look at the last bull market. Started from lows in the year 2000, 2001, and lasted till 2011, okay? And that wasn't even under the conditions we're facing, talking macroeconomic, global debt problems, etc. So we're bullish on gold and silver ongoing. We've never changed. All the nonsense on the way up is just arm wrestling. But we did go through a period from mid-2020 through early 2024 where silver and the miners staircased down and gold went sideways. Go up over 2,000, got hit. Go over 2,000, got hit. Go over 2,000, got hit. Go over 2,000, got hit. Okay. Persistence is what that's called. But that congestion zone by our metrics broke out in March of 2024. Now, in other words, we had enough long-term metrics that re-engaged after being asleep for a while. Quarterly momentum, for example. Not annual. Annual is still positive. So gold then was just above 2,000. Okay, well, this time, it was the fourth time. How do you know it wasn't going to fail? Because momentum said we're not going to fail this time. Okay, it was going to engage. Silver was 25 to 26 zone. Still well below its $30 high that it saw in 2020. But momentum said, no, we're coming out of here. Gold miners, GDX, for example, was 31.5 as our trigger level. Oh, it traded up to 41 the other day. Okay. So but we still have this arm wrestling process, where you make a couple $100 in gold, next thing you know, you drop back 100. I don't know, or silver goes up $3 or $4 and drops back 2 or 3, and then goes again, but it's an arduous process and it keeps shaking people out. It keeps people skeptical. It keeps the enthusiasm low. As far as I'm concerned, that's great. Keep it low, okay? We want to compress it. Meanwhile, the enthusiasm's over there in the stock market.
Silver has always been gold's shadow, lagging behind at first, only to explode past expectations when the market finally wakes up. It's a pattern we've seen throughout history, and right now, all the signs point to it happening again. Think back to 1980. Gold hit record highs, and silver didn't just follow, it outperformed, rocketing from under $6 to nearly $50 in a matter of months. Then, in 2011, as gold broke past $1,900, silver surged from $9 to almost $50 again, delivering gains of over 400%. But here's the key. Silver doesn't just rise, it slingshots. Gold sets the stage, but silver steals the show. And today, we're looking at an even bigger setup. Gold is already pushing record highs, and silver, it's still sitting at a fraction of its historical peak, suppressed and overlooked. The gold to silver ratio, a key metric investors use to spot silver's undervaluation, is flashing a massive buying signal. Historically, when this ratio gets as extreme as it is now, silver doesn't just catch up, it overcompensates, delivering some of the most explosive returns in the metals market. The question isn't if silver will follow gold, but when, and more importantly, how high it will go. With history as our guide, a silver price north of $100 isn't speculation, it's simple market mechanics. And this time, it's not just investor demand driving silver's breakout. There's another force at play, one that's bigger than anything we've seen before, an industrial boom unlike anything silver has ever experienced.
But if you do objective measuring, let's say you're an asset manager, and you're a little bit nervous about the stock market. First off, it hadn't gained much ground since its July high. I think the S&P's up about 3% or something. But if you go back and look, and let's say you're the head of the fund, and you ask your trading guy in the back room, your technician, say, give me some ideas of other places to be that might be safe, that might be lower risk, might be cheap, And he says, well, boss, gold miners, we'll show that chart in a minute, but gold miners are cheap and starting to firm up. Gold's doing well. And how well is gold doing? Well, since the close of January 24 to the close of January 25, so a 12 full month period, gold beat the pants off the stock market. What? You wouldn't believe that if you listened to Fox Business News because, Trump got elected, or if you listen to CNBC. The stock market is the fever. Okay. Nobody seems to be noticing that gold has beat the stock market over the last year. And in fact, since the last 9 years, has almost matched the stock market. When gold was back in December 2015, for example, it was $1,050. You go back and check where the S&P was then and do the percent gain, and you'll find S&P's barely beating gold. And when you measure it against the gold miners, a tiny little subsector of the stock market nobody cares about, it's beating the stock market. Yes, it's actually up more from where it was at its bare lows in 2015 than where the S&P was at that same point in time. So I think that once you punch a hole in the stock market, it doesn't have to crash. I'm not talking about that. I'm talking, we just punch a hole to where the nervous guys say, hey, I need to shift some money. And so some of these asset managers, non-gold bugs even, say, okay, let's move some over there. They got good earnings. Jeez, the dividends are good, especially some of the big miners, and they've been doing well. But I think the stock market is that factor that once you punch a hole in it and drop it 10%, let's say, you're going to have a lot of that money moving. And I think that is the factor right now from the outside that will help engage gold and silver in a more vertical manner.
Silver isn't just a precious metal, it's an industrial powerhouse. And right now, demand is accelerating at a speed the market simply isn't prepared for. The world is going green, and silver is the irreplaceable element fueling that transformation. Solar panels, electric vehicles, 5G networks, every single one of these industries depends on silver, and consumption is hitting record levels. Let's talk numbers. The solar industry alone accounts for nearly 20% of global silver demand, and that number is only climbing. Governments are pouring billions into renewable energy, with mandates for net zero carbon emissions pushing solar production into overdrive. And here's where it gets interesting. Silver's role in solar panels isn't just important, it's essential. Unlike other metals, silver has no viable substitute in high-efficiency photovoltaic cells, meaning that as demand for solar energy surges, so does the need for silver. And it's not just solar. The electric vehicle revolution is ramping up, and silver is embedded in every battery, circuit, and electrical connection. By 2030, EV production is expected to triple, and automakers are already warning of looming raw material shortages. Then there's 5G, artificial intelligence, and the next generation of computing, all of which require massive amounts of silver to function. The industrial world is becoming more electrified, and silver is its lifeblood. The bottom line? Silver is no longer just a monetary metal. It's a critical industrial commodity. And here's the kicker. Supply isn't keeping up. The world is sleepwalking into a silver shortage, and when demand eclipses available supply, prices won't just rise, they'll explode. But what's causing this supply squeeze? Why is silver production struggling to keep up with demand? The answer is unfolding right now, and it's setting the stage for the most aggressive silver bull market we've ever seen.
Spread chart, month-to-month closes, where we divide the price of the XAU index, which is the Philadelphia Gold and Silver Miners Index of stocks. It's been around since the 1980s, therefore it has some history. And you go back to the mid-1980s on that spread, and you could see that if you divide XAU into gold price at that time, XAU was trading about 30%, 25% of the lows were about 17.5% of the price of gold, and its highs were up at 30+%. In other words, it was trading about a third of the value of an ounce of gold. Okay? But then in 2008 through 2015, the spread collapsed, where the relative performance of the miners dropped. It actually started dropping before the gold market even peaked in 2011. Net price peak, I'm talking. And they collapsed that spread down to the late 2015 low, where the XAU index briefly got below 5%, dividing it into gold again, of the price of gold. Very low level, obviously, when you look back and see the prior decades have been up there in the 20, 25, 35% level. So something happened. Well, they crushed the miners. Okay, fine. Means they're cheap. Okay. But if you actually measure that spread reading, which was below 4%, back in late 2015, the low monthly close, was also the low monthly close on the spread, not just price of gold and the miners and silver, but actually of the relative performance of the miners. Since then, that spread has risen and stayed in a range that's been above that low. Now, actually, I just checked before we got together here. XAU index right now is trading at 262% gain since its low close in December 2015. Gold is trading 171% above its low close in 2017. 262%, 170. I'm talking net price now. XAU is up that much. It's up more than gold. And yet everybody thinks the miners are a dog. Well, one of the reasons is that we made a high in 2020 in that surge, which took gold so during the post-COVID event, and blew gold up to 2,000, over 2,000. And since then, price of gold has exceeded that high. Price of silver exceeded that high. It was $30 back then, or actually a high monthly close, about 29. But XAU and GDX, for example, are still below that price high. And so people think, well, they're underperforming. Actually, they're not. They're off that high, yes, off the best levels that they've seen.
For decades, silver has been mined, traded, and stockpiled as if the supply was endless. But that illusion is crumbling. Right now, the silver market is facing an unprecedented supply crunch, and the world isn't ready for what happens next. Let's break it down. Silver isn't like gold. Most of it doesn't just sit in vaults waiting for investors to buy it. Over 50% of the world's silver supply is consumed by industries, meaning that once it's used in solar panels, electronics, or medical equipment, it's practically gone forever. And here's the problem. For the last 4 years, the silver market has been running a deficit, meaning demand is outstripping supply and the gap is widening fast. Mining production isn't keeping up. After years of underinvestment, silver mines are struggling to produce enough metal to meet demand. Major silver-producing nations like Mexico and Peru are seeing declining output, and new silver discoveries are becoming increasingly rare. Unlike gold, which is mined primarily for investment, most silver is a byproduct of other metals like copper and zinc. That means miners don't ramp up silver production just because prices are rising. Supply is dictated by the economics of other metals. At the same time, governments and central banks are stockpiling precious metals, further tightening the market. China has been aggressively increasing its silver imports, and demand from the investment sector is skyrocketing. The moment industrial buyers and investors collide in a battle for limited silver, prices will have no ceiling. And we haven't even talked about inflation yet. Because while supply is shrinking, the value of fiat currencies is collapsing, pushing more and more people toward real assets like gold and silver. The Federal Reserve may claim inflation is under control, but history tells a different story. Every major currency crisis in history has driven silver into a parabolic rally. And right now, the dollar is on the edge of its own reckoning. The perfect storm is forming. Silver's supply is tightening, demand is surging, and monetary chaos is adding fuel to the fire. And when the panic sets in, history tells us exactly what happens next. Silver breaks free and the price erupts. But what about the big banks? Haven't they been suppressing silver prices for decades? If so, how do we know this time is different? The answer lies in one of the most explosive setups in financial history, a short squeeze unlike anything the silver market has ever seen.
But they're still, over the last 9 years, are beating gold. Now, the issue is, and this is what we think is likely to be the best performing place to be this year, is the gold and silver miners. XAU being a representative of GDX being the trading vehicle. Okay. That spread, if you look at it carefully, there is a 3-point downtrend line going back to 1990s, I think it is. Let's see, yeah. Yeah, early, mid-1990s, there was a peak up there at 35% plus. You could draw a downtrend line. And you can see over the last year or two, since that 2020 surge where we bumped that line on the spread, we've been backing off on the spread, still above where it was in 2015, but hugging that line. Well, recent action is nudged out above that trend line. Okay, that's a wake-up call. There's also a range here you can see on the spread chart. Again, it's price versus price, so in effect, this is a price chart. You can see the upper end of that range, and GDX has a similar spread chart with a similar range, just at a different level. And we think, based on technical reasons, that you're likely now to see that spread move not just above that trend line, but take out the top of that base, in which case it's still dirt cheap relative to gold. Look back, 30, 40 years here. But it's coming up out of its base. Now, there's a red line, a horizontal on that chart that I plotted. It goes back to the mid-'80s. And you can see that every time we come down to that red line, it was support for decades. When we broke it, flush. Okay. So simply from a price technical point of view, a spread chart point of view, that is resistance. That's triple the current level. Okay, percent gain. If in the next year or so, a more accelerated phase in gold and silver, in part due to the breakage of the stock market bubble, more money flows into that area, especially the miners, that spread could triple from its current spread level to reach that line and bump it and even stop there. Well, that means that over the next, let's say, year or two, if the gold and silver accelerate, and I think they're about to, more upside than downside corrections, still upward but sharper, that's when the gold miners will engage. And they have the potential to triple the performance of gold during that time. So, yes, we're watching the mama market, gold. We're watching silver. But we think over the next year or two, in the acceleration phase, you will see the miners in silver re-engage against gold in a big way, where they're the better places to be within the monetary metals.
For years, silver prices have been artificially suppressed by the biggest financial players on Wall Street. Banks and institutional traders have built an entire system around shorting silver, keeping prices low, discouraging investors, and ensuring that the real value of silver remains hidden from the public. But every manipulation scheme eventually reaches its breaking point. And right now, that moment is getting dangerously close. Let's talk about the silver short squeeze, the event that could send prices skyrocketing past $100 almost overnight. The major banks have been using paper silver, contracts and derivatives that represent silver on paper but aren't backed by physical metal, to keep prices under control. The problem? The amount of paper silver being traded is far greater than the actual supply of physical silver available. In other words, they've been playing a dangerous game of musical chairs, hoping that no one will demand real silver. But that's exactly what's starting to happen. More and more investors are waking up to the fact that if they try to redeem their paper silver for the real thing, there simply isn't enough to go around. The cracks are already forming. Silver ETFs are experiencing record outflows as investors demand physical metal, and major mints are struggling to keep up with demand. If just a fraction of these investors refuse to settle for paper silver and demand actual bars in their hands, the entire system could implode. This isn't speculation, it's happened before. In 2021, a silver squeeze movement saw retail investors pile into silver, sending prices surging before banks scrambled to regain control. But this time, the setup is even bigger. Central banks are hoarding metals, industrial demand is skyrocketing, and the supply crunch is worsening. If another short squeeze begins now, the banks won't be able to contain it. And when that happens, the price suppression breaks. The silver market goes vertical, and the biggest financial institutions in the world are forced to buy back silver at any price, fueling an upward spiral unlike anything we've seen before. But the real money won't just be made in silver itself. Historically, when silver goes parabolic, silver mining stocks don't just rise. They explode, delivering gains of 500% or more. And right now, those miners are sitting at some of the most undervalued levels in history.
Make a science out of studying those data points. They're ongoing, they change over time, but we all know that the central banks, not ours, but smarter central banks have been accumulating monetary metals. For some strange reason, fine, thumbs up for them. And that's been a good supporter. But on the industrial side of silver in particular, and this I think could be the little stick of dynamite that causes silver at some point in this process to outpace gold. They're monetary metals. That's the underlying fact. Okay. But in the case of silver, it's also an industrial metal. We know that the Chinese control or produce 80 to 90% of the solar cells in the world. And demand for that globally, especially in undeveloped or less developed continents like parts of Asia, Africa, where you don't have a local power company necessarily, in a line running up under the road that runs to your house. And you've got a cell phone and you've got a few other things. You'd like the power and you'd like to have a solar panel in your backyard. Well, the Chinese have 80 to 90% of that market. And the photovoltaic cells in those objects have silver in them. It's an essential ingredient to the solar panels. It's not the kind of cost factor that if it went up would outprice the solar panels. It wouldn't hurt it because it's a small component, but it's an essential component. And it's massive in terms of the demand for it. So suddenly, decades ago when you were a child and when I was a younger guy, silver industrial demand was photos, taking pictures. It was in the, we sort of laugh at that now. That's gone, okay, obviously. But industrial demand, especially for the solar industry, is growing at rates that are vastly outpacing the annual production of silver. Remember, silver is not produced as a primary metal by most miners. There are silver miners, yes. But a lot of silver production comes from base metal miners who produce silver as a secondary metal. They're out to mine copper, but they find silver, so they produce it. But it's not the prime driver that motivates the miners. So even the rise in the silver price doesn't necessarily motivate the base metal miners into producing more. But anyway, if you look at an annual production of silver, you've got a flat picture for the last 5 years or so. And it's not increasing, despite the price having gone up. But demand is increasing exponentially. And this solar demand, I think, is going to continue, particularly when uncertainty hits certain parts of the world, including the U.S., where
Everything we've discussed, the industrial demand, the supply squeeze, the short squeeze potential, and the explosive upside of silver miners, culminates in one undeniable truth. The financial system itself is on shaky ground, and silver is one of the few assets poised to thrive in the chaos. Right now, global debt is at all-time highs, Central banks are running out of options, and inflation is far from under control. Governments have printed trillions in stimulus over the past few years, and the consequences are starting to hit. Inflation may not be making front-page headlines every day, but it's still eroding the value of fiat currencies faster than most people realize. The Federal Reserve is trapped. It can't aggressively raise rates without crushing the economy, but it also can't lower them without igniting another wave of inflation. This uncertainty is why investors are turning to hard assets, and silver, historically one of the best inflation hedges, is still one of the most undervalued plays on the board. And it's not just the US globally. Currencies are losing purchasing power at an alarming rate. In countries like Argentina and Turkey, where inflation has spiraled out of control, citizens have already abandoned their local currencies in favor of tangible assets like gold and silver. The same pattern is playing out in developed economies, just at a slower pace. But here's the key. Gold has already been responding to this crisis, climbing toward record highs as central banks rush to accumulate it. Silver, however, is still lagging behind, just as it always does before a major breakout. The moment investors realize that silver is not just an industrial metal, but also a monetary metal that thrives in times of financial uncertainty, demand could skyrocket overnight. The markets are at a tipping point. The next recession, the next rate-cutting cycle, or the next major financial crisis could be the final trigger that unleashes silver's full potential. And when that happens, silver won't just be playing catch-up, it will be leading the charge. The question now is simple. Will you be ahead of the curve, or will you be chasing silver when it's already making headlines at $100 an ounce? Because history shows that when silver moves, it moves fast, and those who hesitate are often left watching from the sidelines. But this isn't just about price speculation. There's one last element in this supercycle that could change everything: central banks and institutional investors. When they finally step into the silver market, we won't just see a rally. We could witness a complete transformation of the precious metals landscape.
Gee, I'd like to be confident that my house has power. If you live in Texas, you get knocked out almost every year because of hurricanes. For 2 weeks, you're out because the power's down. And pretty soon you get fed up and you want a solar panel. So even domestic solar panel demand, as I understand it, in this country, is rising sharply and ongoing. So that's a factor that it's already underway, but it's a factor that once silver gets going, they always tend to find an excuse or a reason. Oh, now I know why. But meanwhile, you're $55 and just blew out the two highs of the last 50 years before those headlines start to hit the public. And that's kind of what I expect, is that once the silver engages in its next leg, and I think we're about to, that it will be dramatic. And those two peaks at 50 that were, brief moments in time, 1975, 80, and in 2011. So it really wasn't a price level that sustained it all. It was for literally a few days. But those old highs will come out. And I think at that point, you're going to see silver do something like what we looked at on the XAU versus gold chart. Silver's equally depressed versus gold. And if you look at the spread of silver versus gold going back 50 years, you'll see that 20 of those 50 years, the price of silver divided into gold was at least 2%, sometimes 2.5 or 3. Right now, it's 1.15%. So even if you just engage silver up out of its relative performance hole, and by the way, silver has beat gold over the last 12 months. Tell somebody that and they won't believe. Percent gain, January 2024, January 2025. You engage silver up out of its spread hole, relative performance, low priced, and you could easily go to 2%, 2.5%, and it would be routine. It's not even an extraordinary thing. 20 of the last 50 years, you've been there. Well, you do the math on that. It's enormous gains for silver versus gold. So again, we think 2025 is the year to be, watch gold, but especially watch silver and miners re-engage in performance.
For years, silver has been overlooked by the biggest financial players. While central banks hoarded gold, silver was left to retail investors, industrial buyers, and a handful of hedge funds. But that's changing fast. The same institutions that once ignored silver are now positioning themselves before the inevitable breakout. And when they move, the entire market will shift with them. Let's start with the central banks. Historically, central banks have focused on gold as their primary reserve asset, but a quiet trend is emerging. Some institutions are beginning to accumulate silver as well. While their gold purchases have reached record highs, many analysts believe that once gold's price surges beyond a certain point, central banks will look for alternative stores of value. And silver, which has been artificially suppressed for years, will be the next logical step. Then we have institutional investors, the hedge funds, asset managers, and pension funds managing trillions of dollars. Most of these institutions have had little exposure to silver, primarily because of its volatility and the long-standing price suppression by big banks. But that's changing. With the world shifting toward hard assets, the very funds that have been ignoring silver are now quietly accumulating positions. Some of the largest silver ETFs are seeing major inflows, and hedge funds are beginning to unwind their short positions in anticipation of a major breakout. And let's not forget about sovereign wealth funds, massive pools of capital controlled by governments. These funds have already been making historic moves into gold, and if even a fraction of that capital shifts into silver, the market simply won't be able to handle the demand. Remember, silver's supply is much smaller than gold's. It doesn't take a massive influx of institutional money to send prices soaring. This is the phase where the smart money moves first. Central banks, hedge funds, and sovereign wealth funds quietly position themselves before the real breakout begins. And by the time retail investors notice and rush in, silver could already be trading far beyond its previous highs. So what does this mean? It means that silver's breakout won't just be driven by small investors and industrial buyers. It will be fueled by the largest financial players on the planet. When these institutions move, they move with size, and their entry could be the final catalyst that propels silver past $100 an ounce and beyond. But timing is everything. The last time silver approached $50, it happened in a matter of months. This time, with all these forces aligning, the move could be even faster. The final piece of this puzzle is recognizing the moment when silver's breakout shifts from speculation to reality. And that moment, it's closer than most people realize.
You could look, for example, at the general commodity market and say, well, silver's a commodity. Okay, well, fine. If you want to assume that. It doesn't correlate at all to the moves in the Bloomberg Commodity Index, for example. Copper does, oil does, grains do, sugar does. Basic commodities, they tend to move ebbs and flows with the Bloomberg Commodity Index. Let me give you a good example. Gold doubled and silver went up dramatically from that COVID low, from the 2015 low. Let's take that. Gold doubled by the time you got to mid-2020. Between late 2015 to mid-2020, gold doubled. 1,050, 2070, okay? During that same time, the Bloomberg Commodity Index, silver went up with gold too. Yeah, in a zigzag, but it went with gold, okay? Bloomberg Commodity Index from late 2015 made a low, a deep low, after collapsing from highs in 2008 and 2011, secondary high. And still kept going down all the way through 2020. Not a lot, but it kept making lower lows every year between 2015 and 2020, while gold doubled. And silver went up meteorically, okay, as well, percent-wise. So silver didn't move with commodities, it moved with gold. So one can argue, well, it's not a monetary metal. Now, look at platinum, for example. There's a metal that a lot of people like to link to gold. It's totally uncorrelated. Yes, back in 2008, platinum peaked well before gold and collapsed. Gold went up through 2011, so that was a distinct difference. And then with the commodity index making a low in 2015 and continuing down to 2020, so did platinum. It didn't go up with gold. It's not a monetary metal. Silver went up during that time. So silver's behaving as if it says, hey, I'm still a monetary metal. Take its word for it. Okay? That's what I say.
The moment of truth is approaching, and the signs are everywhere. We're no longer talking about a silver breakout that might happen. We're looking at a scenario where the conditions are already locked in place. The only thing left is the spark that sets it all off. So, what will be the final trigger? Will it be gold surging past $3,000, forcing silver to follow? Will it be a sudden supply shock as mines struggle to meet skyrocketing demand? Or will it be a broader financial crisis that sends investors scrambling for real, hard assets? History tells us that silver moves in waves, long periods of suppression followed by violent breakouts. And we're reaching the end of another suppression cycle. Silver has spent years trading far below its historical highs, despite growing demand, shrinking supply, and global monetary instability. But every force that has kept silver artificially low is now reversing. The gold-to-silver ratio is screaming that silver is undervalued. Industrial consumption is at record highs and central banks are stockpiling metals. Institutional money is shifting. Short positions are unwinding. And the financial system is teetering on the edge of another crisis. At some point, whether it's next week, next month, or next quarter, the silver market will hit a breaking point. And when that happens, it won't be a slow climb. It will be an eruption, a slingshot move that will leave latecomers in shock. The smart money is already positioning itself. The question is, will you be ahead of the curve, or will you be chasing silver when it's already dominating headlines at $100 an ounce? Because one thing is certain, once silver starts to move, hesitation won't be an option. But we're not done yet. There's one final thing to discuss. The ultimate conclusion to this silver supercycle and what it means for those who see the opportunity now.
It's persistence of the monetary metals in advancing would be one thing, which people don't acknowledge. If you look at even since March of 2024, we said it's re-engaging, and silver was $25 and went to 35. Right now, it's been trading either side of 33. It's been upside with breaks on the downside. And each of those breaks turn everybody off. Oh, it's no good. It's a top. Even gold, they made a high at 2,800 and they thought that's the top. We're going back to 2,400 and correct or whatever. And those guys are left in the dirt. We're now trading near 29. The point being, okay, I think when you punch a hole in the excitement bubble, the stock market, and again, when you look at it objectively, somebody's selling it. Because since last summer's high, we've barely made gains in the NASDAQ 100 and S&P, single-digit % gains. And it's been either side. It's really been more of a slight upward range of constant selling. There was buying after Trump won, November 6th. It went up big, okay, S&P, NASDAQ. Went up another week or so, then corrected, came back up, took that out. And then when he had, when he swore himself in, when they were sworn into office, it went up again. Okay, again, emotion related to Donald Trump being elected. And I can understand the Trump crowd thinks, so he's going to end inflation, et cetera, et cetera. But that's chasing news. Okay, now at that same point in time, gold sold off, by the way, dropped down to 25.40 on November 6th. Where is it now in relation to those who sold gold based on Trump winning? They're losing $300-400. Okay, so obviously it shrugged that off. But the key is to break that stock bubble, because when you do, and I don't mean momentum will break very easily. In fact, it's about 1%, 0.5% below the recent lows we made in the NASDAQ. As far as I'm concerned, that's it. I'll declare a top at that point. It's dancing on our trigger numbers. When that breaks, and it generates some price decline. I don't mean a crash, but 5 or 10% drop. That's when the emotion goes out of that bubble and sentiment.
Silver's moment is coming. And when it breaks out, the financial world will never look at it the same way again. The forces we've covered, industrial demand, supply shortages, monetary instability, and institutional interest, are all converging into one inevitable outcome: a silver price surge unlike anything we've seen before. This isn't just another rally. This is a full-scale revaluation of silver in a financial system that's running out of options. Every past silver bull run was fueled by fewer catalysts than we have today, yet they still produced gains of 400%, 500%, even 1,000% in some cases. And this time, the setup is even bigger. For decades, silver has been treated as an afterthought, a secondary metal to gold, a cheap commodity for industry. But those days are over. The world is waking up to silver's true value, and when the floodgates open, supply won't be able to keep up. Whether silver stops at $100, $150, or even higher isn't the real question. The real question is whether you see the writing on the wall before the masses do. Because once silver makes its move, there will be no second chances to buy in at today's suppressed prices. The opportunity is now, while the market is still asleep. Make sure to stay ahead of this historic shift. If you found this valuable, subscribe for more insights on silver and precious metals, and let us know in the comments, how high do you think silver will go? And remember, this is not financial advice. Always do your own research and consult a professional before making any investment decisions.
It's hurt. Right now, the emotion is positive. But right now, consider yourself an average middle-class person and you look at your horizon of the things in your life that are doing well. Okay, well, you still got your job. Okay, fine. But, you know, that you never know. Stock market goes down, you could lose it like you did back in 2008. Okay. You look at other things, your cost of living. Higher and higher every year. The one thing that looks good is when you turn on the TV screen and you see, oh man, my retirement account's up 20% last year. Less than gold, but still up 20%. Creates a smile. You take that away from the average investor, and darkness comes. Emotional darkness. And then they start looking for, well, what's working? And you got a friend down the street who for last year has been in gold and silver miners and nobody else has, and he's up 25, 30%, and your stock market just dropped 20. And you're saying, damn, he was right. Okay, it causes a leakage of assets out of the broken category and it goes somewhere else. And in the past, if you go back, my son put out a report about a month ago showing going back to early 1900s, that whenever the stock market breaks big, and usually it goes down sharply for a couple of years, and then sometimes it takes a decade to get back to where it was, what's been the best investment during that time? Gold and gold related, every single time. From 2000 to 2019, gold advanced. Yeah, there was some jiggle in 2008, but it advanced all during that time. For instance, if you go back and look at where was the NASDAQ 100 in 2000, that was the dot-com peak. It took it till 2016 to even get price back up to the price high of 2000 for the NASDAQ 100. 16 years of wasteland while gold exploded. So in each of the bear markets we've seen in stocks over the last 100 years almost, gold's been a place to be. And I strongly suggest it will be the next place to be perceived by asset managers and investors once you punch a hole in the market.